So, quick house rules. I will only address questions or particular comments from those who leave any super thanks on the live stream. Other than that, for the most part, my most familiar pioneers, anybody that jumps on, I'll give a shout out, but I'm generally going to just push through with the live stream. So, what value will you be getting out of this live stream? I'm going to continue the pace and the narrative that has been supporting the live streams in the last couple of weeks, which has been a big push around addressing a huge underlying issue in the community for Black America in particular, which is going to be the banking crisis. The backbone of wealth creation in this country, generally speaking, from a time-tested and proven perspective, is really going to be home ownership, real estate ownership, we can kind of broaden it out to, and business ownership. Those things are not going to happen if you don't have healthy access to the general financial system in the first place. You're not going to access either one of those. So that's generally speaking. So Black America is in a bit of a crisis right now, and it's in a crisis in a way that gets little to no attention in the grander scheme of things. There's a lot of things that we're upset about. There's a lot of things we're fighting about. There's a lot of things that we're protesting about, etc. But one of the, if not arguably the biggest foundational pillar to financial health and well-being, and all of the other things that come, the derivatives that come from financial health and well-being, is going to be having access to the system in the first place. And everything economically runs through the banking system. So whether you're a W-2 employee, whether you're a business owner or aspiring business owner, homeowner, real estate investor, you name it, stock investing, whatever the case may be, you have to navigate the banking system. Okay? So these live streams have been dedicated, as really the majority of the content on this channel, in helping to point this issue out, address the issue, and give the context on how to navigate as an individual, households, business owners, investors, etc. Right? So the insight is coming from daily practice through my career path as a retail banker. I help tens of millions of dollars in consumer and business clientele navigate their banking and lending relationships. And I've been doing that collectively for over 10 years. So I'm seeing it all. I'm seeing individuals that can't get access to bank accounts literally get denied for the most basic level bank accounts. And I'm seeing people with 7 and 8 figures in net worth or 7 and 8 figures in business revenues completely flourish in the financial system and get access to just about everything they need to continue to grow and develop and build something sustainable. So I've decided to bring that to this channel, and that's been the basis of the content, has been relationship banking and maximizing your borrowing capacity. So it's a really long way of me saying that if you are looking to get legitimate content, guidance and structured strategies, knowledge, etc., around how to lay the foundation, whatever your strategy you're going to pursue in building wealth, right? Again, whatever business strategy, real estate strategy, etc., legitimate strategy, you're going to need the information I have to present in these live streams and in these videos. So to really get down to the crux, we're going to be focused on the fact that Black Americans are generally denied access to bank accounts and overall banking services the most in the country. And we're not going to get into any kind of victimhood about this. What we're going to get into is the statistics and the facts, and we're going to get into the current day issues. What's within our control that we can change or do differently to change these statistics and turn them around. Okay? So it's no race baiting. There's no, gaslighting. This is none of the above. This is strictly going to be statistics, strategy based, and getting into the weeds, giving you the information that you need, identifying the problem and giving the information necessary to start solving the problem. Okay. So I've covered in recent live streams that Black America is unbanked or underbanked, and the statistics flow all over the place for the last handful of years. But I've seen everything from you know, upper teen percentage, all the way up to nearly 40+% in conjunction, meaning that you're, unbanked, meaning that literally no access to mainstream banking institutions and products and services. Underbanked, meaning that you have extremely limited access. You might only have like one bank account at one institution and you don't have any access to any other. Being unbanked or underbanked is directly tied to huge disparities in wealth, directly tied to economic depression, poverty, direct correlation. Okay. And I'm going to get into that again briefly in a second. This is the backbone of the narrative right now. Okay. Basically speaking, without access to mainstream financial institutions on a healthy level, you're going to be dealing with higher fees and expenses to do your basic financial functions. Limited financial opportunities. You have difficulty building savings without access to bank products and services. You have reduced access to credit, which is enormously important in this financial system. Limited economic mobility. Being excluded from mainstream financial system can hinder economic growth and opportunities for financial advancement. Security risk, carrying large amounts of cash, vulnerability to fraud, inconvenience and inefficiency, time-consuming transactions. Tasks like cashing checks, paying bills, and transferring money can be time-consuming and inconvenient without access to online banking, direct deposit, or debit cards. Limited payment options or reliance on cash restricts participation in the increasingly digital economy, making it harder to shop online and engage with merchants that prefer card or digital payments. Strained social and personal relationships, borrowing from friends and family. Being underbanked may necessitate borrowing from personal connections, potentially straining relationships. So as you can see, this extrapolates out to a financial, social, and societal crisis, basically. And we're in a modern era now where, as mentioned, things are getting so technologically advanced in the financial sector. We just had a scenario where stable coins are getting pushed, through the political spectrum and going to revolutionize banking. I might even change the title around that, because what this basically means is that many of us, somewhere between a third or more of us, 1 in 3 of us, or potentially more, don't have equitable, solid access to the financial system. So what you end up with is a scenario where you either have to build your own institutions and have those institutions cater to your specific needs to help integrate you into the system, or you have to meet the standards and requirements of the mainstream financial institutions that were not designed for you, by you, or around you. You only have 1 or 2 options. So to put that into context, there's 4,500 plus financial institutions in this country at the time of this recording. There's less than 40 Black-owned and operated bank institutions in this country. And honestly, from what I'm seeing, the number's somewhere close to 20-ish. So we're going to just stick to somewhere, below 30 or 40 financial institutions. That's like 1% of 1%. And that number is shrinking, because when discrimination and racial issues were worse 80, 90 years ago, we had over 100 financial institutions at the time, Black-owned and operated financial institutions. So as things get on a more mainstream level, get more equitable, and there's more laws and rules and social norms in place to, get around racial issues. Not that things are perfect by any means, but it's as good. We're not about to sit here right now and act like things are as bad now as they were for our ancestors in the 20s and 30s. I'm not about to entertain that. So if that's the case, we're regressing dramatically. And I just laid out, how this is a problem if you're looking to build real wealth in this system, because you can't even do the basics. And I know this isn't everybody. A lot of you watching this are going to be people who are in stable positions, have access to bank accounts. So probably should have said this a little bit earlier, but you do need to stick around for this, because this has a ripple out effect for you if you're still immersed in the Black community. This still matters if you are the business owner or the real estate owner, because you have to have customers, you have to have tenants. You're still integrated in the same economic system. You're not getting away from this problem just because you may not be underbanked or unbanked. So that having been said, the alternative is we're not creating more, financial institutions for us, by us, that can cater to our specific needs and circumstances and deal with and focus on those of us that are in need. Okay, cool. That means that we have to integrate ourselves and collaborate with existing financial institutions, 4,500 plus of them, that are going to be dedicated around other demographic groups that are not us primarily. So we have to basically meet the standards and fit into the financial and economic circumstances of other racial and ethnic groups. So if that's the case, then that means where we are economically with being some of the most unemployed, we have the lowest incomes, the worst credit scores, we have the worst financial backgrounds and reputations, generally speaking. That means our ability to integrate is going to be drastically ineffective. So all of this is the backdrop to get to the understanding as banks creating. So as far as overall Americans, I didn't look at that statistic yet, but I will pull it for you really quickly. I believe it's somewhere around 13%. So unbanked is going to be about 4.2% of the population. Underbanked, which is a different category, meaning it's drastically limited access, that is closer to 14%. So in total, there's somewhere around nearly 19% of Americans to answer that question. So again, house rules, anybody with questions or statements that they like, covered, that's going to be covered for those who leave a super thanks on a live stream. So what this basically means is that we either have to start creating our own institutions that can cater to our current needs and circumstances, or we need to start seriously figuring out our financial and economic circumstances to start integrating into the financial system and the banking system. So the denial rates, there are no direct statistics for. There are no really, credible direct statistics for what percentage of Black Americans are denied bank accounts and access to banking services. So while there are no direct statistics on denial rates specifically for opening bank accounts for Black Americans are limited in the search results, there is ample evidence suggesting significant disparities in access to banking services and higher denial rates for other financial products like credit and mortgages. So unbanked rates, Black Americans have significantly higher unbanked rates, meaning they lack a checking account or savings account. And that statistic as of 2019 was 13.8%. Mortgage and credit denials, Black Americans are disproportionately denied credit for mortgage and mortgage applications. For example, Black mortgage applicants were denied at a rate of 27.1% as of 2020. Reasons for disparities. Factors contributing to these disparities include mistrust of banks. Many Black Americans cite a lack of trust in the financial system due to historical and ongoing discriminatory practices. This is enormous. This is extremely important and enormous because I deal with this every single day as a banker. It is really, really, really discouraging how bad that philosophy still exists. And that's generationally. I'm seeing it with the older group and I see it with the youngsters. Literally terrified to interact with banks. There could be basics like check cashing, opening a bank account, and real levels of anxiety around discussing or navigating credit and credit related products and everything related to that, the growth related to that, okay? That in itself is crippling because you can't even, without communication, you can't develop any kind of relationship of any kind. There has to be healthy levels of communication. So if you're not coming in and interacting, engaging, learning more, doing research and coming in to financial institutions and learning more, inquiring effectively, you can't build a relationship. So this first one is huge. The next one is going to be geographic disparities. Banks are less likely to operate branches in Black communities. Well, you may look at that and say, well, damn, that's tough. That's messed up. That's, pitchforks come out, torches, etc. Cool. Banks have to run profitable businesses. They're for-profit entities. And if they're credit unions, they're not for profit, but they still have to run a profitable business to operate. Yeah. So the only thing that's really separating is where the profit goes. For-profit and non-profit is not that one cannot be profitable. They both have to be profitable. Where the profits are going is what's important between those two. So geographic disparities, credit unions or for-profit banks, private banks, both are going to have the same problem. Black dominated areas, generally speaking, have lower incomes, worse credit scores, worse employment rates, worse financial literacy, and they're the most skeptical and skittish of the financial institution. So it's not a very welcoming environment for a bank to come pop up and set up shop. And I understand that there's historical and existing circumstances contributing to this. But again, this content and my channel is around what we can control and influence for ourselves for the most part. We're striving to do what we can do to move the needle. The rest of it we'll have to push from a different perspective. There's other people fighting that fight of the inequities and inequalities and discrimination, etc. What I'm here to do is point out the problem and take what we can control or have a good influence over and help us make better decisions. So the environment for geographic disparities, creating geographic disparities, is an us problem. Because these banks need functional clientele in order to be enticed to come set up shop and to be able to sustain setting up shop and keep shop set up. So we have to have consistent income, stable income, sizable enough income, decent and consistent financial activity. So that means money coming in, money coming out, cash flow. We have to be able to have enough financial literacy to use their products and services effectively. And we have to have reasonable enough financial reputation, credit scores, and everything else that goes around it to access other financial products that will make the bank profitable. We are struggling in every single one of those categories. So banks, you can't even get to the denial portion of the poor relationship or connection between Black America and the banking system, because a lot of them aren't going to even set up shop in your immediate geography. Higher costs and fees. Black communities often face higher minimum deposit requirements and fees for entry-level checking accounts. Thank y'all for leaving a like and supporting on the channel. Yes, absolutely. I will get to that, Troy. If you want to hang tight, we've already kind of covered some of that already, but I will be going back over some of these things. We will give action steps. I'm already kind of tapping on that, so thank you. Everybody that's coming in, leave a like. If you want to really kind of dive in and have your comments read out, or if you want to have questions read out, leave a super thanks, and I will directly read your question out loud and cover it and give it some time and attention. So higher costs and fees. The Black community is subject to higher deposit requirements or fees for entry-level checking accounts. That's a huge barrier to entry, right? That in itself, you talk about getting rejected for your bank account, rejected. That's the thumbnail, that's the statistics. Again, we're in a scenario where we don't have the financial literacy or the financial resources to navigate the banking system. So we're a higher risk, Higher risk means the bank is going to require more from us to open up that relationship. And you can look at it discriminatory, but they're, again, going back to what I said about the geographic disparities. Banks have to run a profit like any business. So at the end of the day, if you're higher risk, that means you're going to cost me money. So in order to mitigate that risk or offset those potential losses, I got to get more from you up front. Cost of doing business. Okay, systemic bias. Some research suggests systemic bias in lending standards and practices may play a role. Of course, that's not completely out of the system. Let's just be honest. Of course, it's not out of the system. We're barely a handful of decades where it just stopped being okay. So of course, it's not gone. We're only a few decades removed from where it stopped being okay to openly discriminate against us. So of course, it's not out of the system yet. You had this set up in place for hundreds of years. The country's official date is 250 years old or something to that effect, or going on 250 years old. But the structure that the country was built on goes back to the late 1400s or early 1500s. And so the practices are 400 years old, 500 years old. So yeah, we're only a few decades removed. We're 5 decades removed, give or take, where there's laws being repealed and laws being put in place to keep these things from happening. But you have 10x that, where it was put in place and the entire system was built and thrived off of it. So of course, there's going to still be systemic bias, no question about it. While direct denial rates for opening bank accounts are not readily available, the available data points to persist patterns of unequal access to banking services for Black Americans, with higher rates of being unbanked and experience denials for other financial products. My people, listen. Any of you that are listening to content for higher level financial strategies and investment and business strategies and credit strategies, you're wasting your time if you don't have this aspect down pat. There are statistics showing somewhere between upper to mid 20% to nearly 40% of us are unbanked or underbanked. That is not counting the percentage of us that do have access to multiple different banking relationships that don't know what the hell we're doing. Consumer or business. I handle $20 to $30 million, $40 million a year in deposit and investment relationships, and similar or higher numbers in lending capacity relationships, from loans, credit cards, mortgages, etc. They are passing through my hands and my expertise and assisting people with navigating them, maintaining them, growing them. And I can tell you firsthand, a lot of us, even some of us that do relatively well in income, have decent business revenues, own homes, do not have this aspect down pat. So if you're doing foreign currency exchanges, if you're day trading, if you're doing complex real estate strategies, if you're doing complex credit stacking strategies, you're putting yourself in a potentially higher risk scenario situation, because the rug is going to come out from under you if you don't have relationship banking down pat. The other content that's out there that is super sexy, the tax strategies, LLC strategies, the credit strategies, all of that stuff is built on top of this. The reason that's not talked about is because the people covering it are coming from backgrounds where they're not struggling with these things. Banking relationships are basics for them. They're on that already. They get that passed down to them, or even, like even the working class of them and the borderline poor and working poor of them. The banking side is the basics. They understand these things, and I see it firsthand every day. There's exceptions, don't get me wrong. But generally speaking, almost every other ethnic group, minus brand new Latinos and Latins coming to, Hispanics coming to this country and other immigrants and Black Americans, everybody else, Asians, Arabs, Indians, and I mean Indians as in Asian Indians, Jews, white Americans, everybody else pretty much got this pack. They good. Vietnamese, you name it, they good. They're okay. So they can get into these more complex financial strategies and plans, generational wealth building strategies, and all this other high level, sexy topic stuff, because They already got the basics of banking and credit down pat. So where's the foundation to the solution to the problem? For one, we have to normalize financial literacy and banking. The top reason that was put on here is mistrust of banks. We have to go out of that. Not because banks are these benevolent institutions and they would never do any wrong. Absolutely not. That's not why. Why is because the distrust and the fear comes from lack of understanding. We have to get a better understanding of how finances work and economics work. My channel I do my best to put that information out. And I'm going to be putting out more frequent content covering things on a nearly daily basis to help cover that gap better. For those of you who are taking your time out, like Troy here in the comment section and a few of you others that are watching live right now and looking for this type of information and looking to make a difference. I'm here for y'all. So we have to normalize in our households and amongst our social circles, banking and finance. We have to start making it a habit. Listen, let me tell you something interesting about this real quick. As I keep talking about how I manage a significant size book of business, and I'm not saying that from an over braggadocious point of view, because to be honest, there's way bigger fish in the sea. There's people managing one client with 20, 30, and $40 million. I'm handling several hundred, businesses and consumers a year with that same mix of finances. It's significant, but trust me, there's way bigger fish. But let me tell you something interesting when I talk about normalizing financial literacy and economic literacy, okay? You would be surprised. And now this is a day-to-day thing I notice, right? You would be surprised how the basics of just how other groups enter the bank when they need to do their banking. Just the way they enter the bank. It is very common for everyday individuals to walk in and do they want to. But it is common for other groups to come in groups. I notice those who are financially successful, it is not uncommon to see them come in with their children, their spouse, their siblings, their parents. They integrate each other on their bank accounts constructively. I've seen scenarios where siblings, grown siblings, 30s, 40s, and 50s, are banking together and using that banking network to pay for their elder parents and their family, to fund their lifestyle. So they're integrating their inflows of money, dividing and splitting up their cash flow, and using a system to make sure that they're taking care of the retirees and elders and their families. I see very similar happen with parents to their children. They put them on their bank accounts. They start bank accounts with them early. Some of you may not know that there are bank accounts available for kids as young as 6 years old. Comment down below if you're watching this live and you are aware that there are bank accounts out there, or there's products out there available for kids as young as 6, besides just like minor savings accounts. There's actual full scale, relatively full scale checking accounts available for 6-year-olds. Comment that down below if you knew that. So my point is, I see entire households and various different immediate relationships come in commonly to bank together. And even when I do see the Black community come in, and I do see the Black community come in and do that right, by the way, sometimes. I'm not saying that from a strictly negative perspective. But unfortunately, close to 50% of the time, it's extremely negative. Where, I'm seeing ooh, that's a wonderful one, Troy. That's great. I'm actually going to get to that in a minute. Hold on to that one, Troy. I'm actually going to get to that in a minute. So what I want to say is, from the normalizing perspective, we have to pay attention to what other successful communities do. We all talk about it all the time. A lot of us talk about it all the time. Other ethnic groups circulate money amongst themselves way better than we do. We generate a lot of money. We generate a lot of value. We spend a lot of money in Black America, but we don't circulate at all. $1 in the Black community goes out almost immediately. a dollar in the Asian community, Jewish community, Arab community, Hispanic community, white community stays for significantly longer. Some of the, and what's funny, that wealthiest ethnic groups and racial groups are in the order that the dollar stays in their community the most, just about. Jews are pretty much at the top. Asians are at the top. Indians are, Indian are at the top. Arabs up there, white people, white Americans, etc. They are in the order that they're generally the wealthiest. The dollar circulates amongst them the most. Thank y'all for liking it when y'all come in. I appreciate y'all. So normalize financial literacy, banking we have and economic literacy. So what I mean by that is, and Troy, the point you're asking is where I'm about to bridge in a minute, but I want to get past a couple other points. We have to normalize financial activity. We have to normalize financial literacy, and we have to normalize it amongst each other as a group. What I've noticed too commonly is the crux of my channel and why I identify my consistent viewers as pioneers. I call y'all pioneers for a reason. It's not a cute catchphrase. It's because in most times than not, what I notice is many of us that are building first generation wealth are trailblazing. And it's usually just us out of our entire family, and whether the ones that are dependent on us or we're really young and we're coming up and everybody else is growing and not paying attention to it. Whatever your scenario is, many of us are the only ones doing it. We're trailblazing and we're pioneers. We're the ones going out, getting information, taking the risks, taking the chances, trying things and trying to elevate ourselves and doing it for the greater good. We have to move more as a unit. Every single group that is succeeding in this country financially, economically, they function in units. And I see it firsthand every day in the banking system. Okay, next, we have to improve our financial benchmarks. And this goes into what factors make banks profitable when it comes to their clientele base. So this is where I'm going next before I get into the question that Troy asked. What makes a customer profitable to a bank? This is huge. Besides financial literacy and economic literacy and the behavior of normalizing working as a unit financially through the banking system, we have to be profitable as customers and clients. We have to be low risk and profitable. I say that on this channel since its inception, late 2022. I've been saying that for going on 3 years. Hundreds of videos, 600 plus. Many of them I've said the same thing in some form or fashion. We have to be low risk and profitable. What does that look like? You may ask. Great question. Let me elaborate. Banks' profitability hinges on a complex interplay of factors with customer relationships at the core. Identifying and nurturing profitable customers is crucial for long-term success. Here are some key factors contributing to a customer's profitability for a bank. Take notes on this. This is you if you want to be financially successful. If you want to be a successful business owner and successfully acquire capital to start, grow, and launch a business. If you want to be a successful homeowner and get the capital to own a home or own much real estate, build a portfolio of real estate. If you want to get into the stock market, if you want to be a successful W-2 worker and build strong financials just as a W-2 worker, I'm not discouraging you working if you want to build wealth that way. You want complex tax strategies? This is where it all begins. Relationship depth and breadth. Multiple product holdings. Customers who utilize a broader range of banking services, checking accounts, savings accounts, loans, investment, credit cards, etc., generate more revenue streams for the bank through fees, interest, and commissions. Wow. Imagine that. Having a literacy and the financial tools and means to operate and access and qualify for multiple products. It's called relationship banking, the foundation of this channel. I'm going to read that one really quickly one more time because it is enormously important. Customers who utilize a broader range of banking services, checking accounts, savings account, loans, investment, credit cards, etc., generate more revenue streams for the bank through fees, interest, and commissions. High balances. Having a good enough income, savings, and or inheritance allows customers with large deposit balances or investment accounts contribute significantly to banks' profitability by increasing its lendable funds and net interest margins. So you having good income and or good savings and or good inheritance or wherever the money comes from is more profitable for the bank. Why? Let's read it again. Because this increases a bank's lendable funds and net interest margins. You're becoming profitable by having good cash flow and or savings. Transaction frequency and value. What? You can't just start a bank account and just let it sit and do nothing? That's crazy. That's crazy. You can't just start a consumer or business banking relationship and do absolutely nothing with it? No way. Why is that? Let's talk about it. Frequent transactions, especially high value payments, generate fee income and demonstrate a deeper engagement with the bank's services. Wow, that's profitable for the bank? Crazy. Crazy. You know how many bank accounts I personally opened and witnessed them get closed within 60 days from inactivity and no deposits? Ask me. A ton of them. And guess what the common demographic is? Black Americans. Crazy. Crazy. Hey, just let me know what you don't understand. If it's something I talk about and cover, let me know what you don't understand. Sure. Anything in particular that I'm covering that is not making sense, let me know, and I will actually take the time out to clarify for you. So, what's the next one? Direct deposit. Utilizing direct deposit for income demonstrates a deeper relationship and leads to increased deposit growth. This is a sleeper. I have covered many strategy-based videos where I teach you how to bank account bonus hunt, how to credit card stack bonus stack with credit cards using direct deposit. Direct deposit is a very basic but crucial cornerstone feature / service that banks absolutely love, and they use it as a tip of the spear to get you to use to strengthen and bolster your banking relationship. So what I'm saying is they use almost all of the bonus offers that bank accounts create and put out in the marketplace as marketing. You will notice that a direct deposit is one of the most common consumer features that is needed to qualify for a bank account bonus. You will also notice that if you want to avoid service fees on checking accounts, what is the most common thing that they ask, especially on the entry-level checking accounts? Direct deposits. It is the most legitimized form of electronic funds transfers for your income. Not Zelle, not Cash App, not Venmo. No, direct deposit, ACH. It's the most legitimized form of transaction, of transfer in the financial system for consumers with banks. And that same thing holds with businesses. Using ACH is safer, more familiar, and is a better, more stable and reliable function for the bank. It's preferred. Direct deposit is actually a top way to develop relationships with the bank. Crazy. All right, let's get to a couple more sections so I can get to this next point. Customer loyalty and retention. Reduced churn. Remember when we talked about not using your bank accounts? Remember when we talked about you not using your bank accounts? And them closing out, or you looking risky, or you just closing out the bank accounts and hopping around bank to bank. Not good, not healthy. And there's a system tracking that called ChexSystems. How many of you, comment down below, have been denied by ChexSystems or even heard about it and had a ChexSystems ran on you? How many have pulled your own ChexSystems? Comment down below. If you don't know what ChexSystems is, comment down below or comment and let me know. Reduce churn. Loyal customers are less likely to switch to competitors, reducing customer acquisition costs and ensuring consistent revenue streams. So what does that mean? If you want to be profitable to a bank, you need to use their products and services, and you need to stay with them a long period of time. When you're profitable and become familiar, you get access to more features and benefits. Positive word of mouth referrals, another sleeper. Satisfied and loyal customers often act as advocates, attracting new clients at lower marketing costs. This is enormously true. I personally, as a banker, get referrals by giving great service, being knowledgeable, and being constructive and adding value to my business and personal clients. And they come back with their family members, peers, and colleagues very often. This is true. Less price sensitivity. Loyal customers may be less inclined to seek out the lowest fees or interest rates elsewhere, allowing banks to maintain pricing power. If I'm getting enough value, I don't mind paying for it. That's all that basically means. Wealthy people don't really care about cost as much as they care about value. Smart people don't care as much about cost as much as they care about value. I will pay you if it's worth it, is what that basically means. I will pay for it if it's worth it. Trust and reliability. A strong sense of trust in a bank fosters customer loyalty, leading to a repeat business and potentially lowers interest rates on deposits. What that basically means is what I said at the helm of the live stream. If you're not going to create your own institutions and bank there that can be more familiar to you and trustworthy to you because you're a part owner or investor there, or the people that are owners and investors there are of your community, look, function, and come from a background like you, then that means you have to start finding a way to integrate and create relationships and trust and build reliability and understanding with other institutions that are not catering to and designed for you and built by you. That's the only two options we have. This is why the friction and race baiting and all of the divisiveness is not really helpful. Because if you're not going to create your own, if you're going to have this friction, then that means you're not going to be looking to integrate or build trust and reliability. So you got to create your own if you want, you know what I'm saying? To get access to these same, you need these resources regardless. So that means you have to create your own or you have to work with other people who have them. Efficient service and low cost to serve, digital adoption, fraud security, cybersecurity costs, meeting customers' needs and delivering value. Personalized products and services, tailoring products and services to individual customer needs can increase engagement and loyalty. That's big facts. Proactive notification and recommendations, offering customized insights and suggestions for financial management enhances customer satisfaction and loyalty. That is big facts. I will slow that down for a second. When banks provide features and benefits and services that allow us to manage our money and our banking relationships more effectively, account alerts and other features that alert us to things to protect us and alert us to opportunities, that makes it easier for us to navigate. We're better informed. We're more likely to get value out of the relationship, and we're more likely to stay. Hopefully that makes sense. Exceptional customer service. Think about American Express for those of you who have the benefit of being card holders or account holders with American Express. Immediately comes to mind when we think about exceptional customer service. Navy Federal is a great financial institution that also has great customer service. I bank and have credit card, have consumer, business, banking, and credit relationships with Navy Federal and American Express to the tune of 6 figures. And I have had phenomenal experiences, generally speaking, with both. Customer service is enormous. Delivering reliable and responsive service, particularly for high net worth clients, builds trust and encourages long-term relationships. Absolutely, without question. You treat me well, you treat me with respect, you answer my questions, you're knowledgeable and you're responsive, I'm much more likely to continue doing business with you. How I am treated is absolutely going to predicate where I do business. Strategic cross-selling and upselling, identifying opportunities. Banks can increase profitability by identifying opportunities to offer additional relevant products and services to existing customers based on their needs and behaviors. This is why banks in part collect so much data on us. They collect so much data on us because they are looking for opportunities to learn more about us and offer more valuable products and services. The more they can cross-sell and upsell, the stickier the relationship, the more likely you are to stay, the more fees, commissions, interest they earn on a relationship while still adding value for you. Deepening relationships, cross-selling transforms a bank into a comprehensive financial partner, enhancing brand loyalty and reducing the likelihood of customers switching to competitors. Absolute facts. I had a nonprofit come to me on yesterday, shopping banks, because they bank for one significant size institution in the metro area that I work out of. Won't say the name of. And that financial institution, as large as it is, has reduced its human banking functions in the branch, meaning that they have reduced themselves to, self-serve options, basic transaction line, activity, and there's no real relationship bankers or relationship managers in the branch. The higher level people who are actually navigating the actual banking relationships, okay? So the people who are going to learn more about your needs, gather the data, make recommendations, handle your service requests, help give you better product services and access points to make your relationship worthwhile and profitable and functional for you. That nonprofit that has 7 figures in revenue is shopping around because that bank is no longer offering that. So they came to us and they're sitting down and they're like, look, we need the online features and functions. You guys have that. But what we really need is a human expert that is dedicated to us that we can call or email or come into and make changes, upgrades, swap people out, open up accounts, move money around, and have customized, quality, consistent service. We need that. And they're willing to switch a 7-figure a year revenue business, nonprofit, over to the bank that can offer that to them. This is the type of scale, and this is happening at branches across the way all the time. So deepening relationships is essential, okay? So I'm gonna get to the point. Troy, I see you made some comments, and I'm gonna get to that in a second. I wanna go back to something because you asked something earlier that I wanna address and then I'm gonna get to with some of your other statements, all right? So I'm going against my house rule for a second, but this is a really good one and it adds value to the stream. So I'm willing to touch on this one. Are banks talking to us about these things? Are banks hiring us as tellers to find out more about these things? Troy asked a great question. Troy Bowdy, or Bodie, excuse me, or Body, if I'm saying it wrong, excuse me. Asked a great question. And it is important. My next live stream, most likely my next live stream is going to actually expound a lot on how much banks are investing in expanding into underserved communities. And it's not all benevolence. Some of it is about doing the right thing. But some of it is about there's a huge untapped market share of Black Americans, new immigrants coming to the country, and just overall everyday Americans that just are underbanked or just not tapped into, okay? There's millions and millions of people that the banking system just doesn't have its hands on and its mitts on, and businesses that it is looking to get better integrated into the community to do, okay? So to answer your question, Troy, the answer is absolutely yes. There has been a push around diversity hiring as far as pulling more Black Americans and minority Americans into the financial system. And that helps because they're trying to reach the underserved communities like Black and Brown for the banking relationship. So one of the most effective ways to do that is to hire some of them in, because once you bring them in, then you have the natural inclination twofold. One, they're going to bring a lot of their own people in and spread that to their households and their community as they're learning and integrating the system. I remember when I first got into banking and got hired in, how proud my family was coming from a underprivileged black background, a working class, working poor black background, you got a job at the bank, you's the man. And that still kind of holds true to this day. It's almost the equivalent of like finishing college, etc. It's really looked at as a prestigious thing in the black community, generally speaking. Oh, you work at the bank. And to some degree, it's valid. It's true. There's a lot of value that can come from working directly in the financial system. I'm benefiting from it greatly. But to answer your question, yes. So the twofold is, one, they're going to bring that back to their household or community, and you're going to have referrals and integration come into that. Number two, trust and reliability. If Black and brown Americans are walking into more financial institutions, seeing more of their people, they are going to develop a greater level of trust and familiarity. And that bridge gets built. Because if I'm Black or brown and everywhere I walk into has affluent looking white people or Asian people or Indian people in it, then or Jewish people, I'm not going to feel familiar. I'm not going to feel a sense of representation. I'm going to be more skeptical to communicate and integrate. And it's not because of hate or anything on that level. It's just human. It's a human factor. It's a human psychological factor. We are more apt to engage with people who look like us and that function like us and talk like us and have similar backgrounds or ideologies, etc. The more commonalities we have, we're more likely to integrate or interact with each other. Okay. So if I walk into this big scary institution that I'm already not versed in, it's not in my community, it's not promoted in my household, but I have to deal with it. When I walk in, people don't look like me, don't talk like me, don't dress like me, don't come from my background, don't go to school with me, doesn't shop at the same grocery stores, don't go to the same churches half the time. If we don't have any of these things that are core to us in common, then it is more difficult to bridge that relationship. Banks understand this. So they're doing a couple things. They're hiring more of us. And once they get more of us, they're using that natural word of mouth to bridge the gap. And they're using the familiarity of not only us going into branches, but Troy, to the question you're asking, banks are starting to push us out into the community. This is where I have gotten my opportunity to bank business clients and nonprofits outside of my retail location, because I, as a banker, have been allowed to go out into community engagement and development and workshops and speaking engagements and actually speak and actually go out and get clients and actually go out and go to and patronize their businesses and go speak to their clientele and speak to and patronize their people. So banks are absolutely catching on to this. And they know that trust and systemic divide is the problem why they can't tap into this market share. So to answer your question, they're absolutely tapping into this. So they're doing a lot of financial literacy free. If you're not familiar with CDFIs, community financial development institutions, that's a whole nother world that banks, big banks, private banks are behind. Okay. So banks have caught on to, if we want to reach some of this untapped market in these underserved communities, not only because it's right, but because there's a lot of untapped market and profitability to be had here, we can elevate these people. We can, close the literacy gaps. We can close the wealth gap and do good and do well in the process, profitability wise, to the bottom line. So we need to hire more of their people, and we need to reach more of them by pushing off into the community. So to answer your question, there's billions of dollars, and I'm going to be covering that in the next live stream, probably like Wednesday this week. Troy and anybody else that's watching that has this similar question. Banks are actually doing more, but the problem is they're not sexy at it. They're not sexy at it. They don't have this new to them. They're very square. They're very rigid. So they don't know how to appeal. And that's where it's still a growing process there. They're not reaching people the way that influencers and like internet influencers and stuff are able to do it. Banks have a lot more laws. They got to be a lot more, there's a lot more regulation. They got to be a lot more careful about what they say, what they promise, what they market, what they promote, So they can't say the sexy stuff, the captivating stuff, the promises. So they have to be very rigid. And it's not sexy. And so people don't pay attention or attend or take it seriously. It sucks because these content creators are selling all of this sexiness, but there's not a lot of substance there for a lot of them. A lot of y'all watch a lot of devoid content creators. I'm going to leave that there and say politely. Y'all are not listening to people who have real knowledge base or skill sets in these. But a lot of these people are a few years removed. They're a mentor connected. They bought into somebody else's program and they just regurgitating information. I am literally somebody that has a full-time career in what I'm talking about in financial services and banking and credit and lending. So I can speak to this. I have active licenses around this topics that I'm covering. Y'all are watching content creators that are people just like y'all that were driving forklifts, that were in all kind of other industries and jobs and stuff. And they just ran across programs faster than y'all that y'all don't know about and white labeled it or back-ended and got into it. In some cases, that's cool. I'm not trying to, get into how people make their money, but for y'all trying to learn, it makes a difference. Okay. So anyway, banks and credit unions and financial institutions are very much aware that there's a lot of untapped market share and that they're also competing with the changing landscape of, fintechs, institutions, etc., and the sexiness of the online wave and how that's drawing attention away from them. So banks are absolutely pouring money and resources into getting into the community. They're just not good at it yet. All right, to answer that question. They are hiring, though. They are definitely tapping into that, Troy. All right. Troy, you also said, just tell us like baking a cake. 1, start an account. 2, get $2,000 in an account. 3, transfer to a CD. All right. So you're looking for step-by-step breakdown on how to bank. I'm not going to go completely into that in this live stream, but I'll give you a little bit of a sequence. You have to sit down at home and put it in your own words, so much that the info is over your head. I just want to know how to buy a house step by step, how to buy a car step by step. And then not underserved communities, they call us minorities, but the money goes to the Mexicans, not us. I go to the bank all the time, but I see everyone else but us. Yeah, definitely. Don't get me wrong. There's a lot going on. Are you going to black churches and high schools talking? Yes, I have had the opportunity to do both of those, Troy. Very fortunate to say. I'm from New Orleans and I still work in New Orleans full time. So it is still a pretty black city. And so I definitely work across racial lines for sure. Let me clarify that. And I'm saying that from a completely comfortable and positive place. I literally work with every ethnicity in my community, but I have had the privilege of working directly with black nonprofits, black churches, black business owners, and black youth. Absolutely. I've had the privilege of doing that, talking to the football teams and basketball teams at colleges, not quite colleges yet, but I have interests. Like I have individuals that I've spoken at other events that are at colleges that are working on getting myself and other of my team members there to do so. So yes. All right, Troy. In particular, you leaving the most comments and I'm dealing with you directly. Listen, to be respectful to the live stream and to the replay, I'm not going to get into the weeds of the step-by-step in this live stream. What I will implore you to do is continue to stay engaged with me. And I may make a video request dedicated around you and your questions. That is a time invested component. So I am asking you, you have been very engaging and I appreciate that. Support the channel. Support the channel. Like, comment, super thanks, leave some love. I will work on dedicating something that'll be a little bit more of the ABCs of these functions because you're not the only one with these questions. I want to clarify that and make that abundantly clear. You're not the only one with these questions. A lot of people need the step-by-step hand-holding process of how to set up a healthy banking relationship, how to access credit, how to get home, buy a home. I've got a lot of content already around that. So also surf the channel but I will work on a way to provide something for you dedicated to you, okay? But I do want to be respectful to everybody else watching this live and watching the replay that is kind of looking at this from a different perspective or trying to get this information in a different way. So hopefully that works for you. Shout out to that. Subscribe and like. I appreciate you. Absolutely. Stay tapped in. I will be doing many live streams 2 to 3 times a week. I'm about to start putting out straight raw videos, getting into the ABCs and some of the higher level financial concepts just to get out more content. I could put out a video, a couple videos a day. That's that much information I have and that many problems to address, that many questions to answer. So I'm going to work on getting to that between shorts, regular long forms, and live streams. So I'm going to get into more content for you guys. So to wrap this up, because I want to keep this as clean as possible, hopefully this giving some context. This is a lot. There's so much more to expound upon this, but I'm going to continue to push out, build on this through these live streams. All right. To recap really quickly, somewhere between 20 something and nearly 40% of us are unbanked or underbanked in the Black community. We have 4,500 plus financial institutions in this country and less than 30 Black banks that I've seen from the research that I've done that are Black owned banks and Black predominantly invested in banks. Okay. So we're not creating our own institutions, and that has shrunk over the decades, by the way. Again, quick recap, over 130 Black banks in the early 1900s. We've gotten down to nearly the 20s. Contributions to that really quickly, as I shot in another live stream a few live streams back. If you want to dive into that further, that live stream was really good. It was about a week or so ago, and that was also kind of a Black banking crisis video live stream. But the background to that is simple. We don't normalize or make it priority in our culture to celebrate and support these financial institutions and build these institutions for ourselves. We don't care about it, even though all of the consequences are kicking us in our ass, and we want to fuss about that. But it is not common for us to not only make financial literacy and banking literacy common, but to get to the point where we promote careers and even building institutions around banking and financial services. And so that's number one. Number two, the metrics that make banks profitable and stable is the clients, the clientele. We don't have the income, the credit, the literacy, and the behaviors and financial functions to keep banks profitable. That's why Black banks don't grow and develop commonly. That's why they're not cropping up all over the place, even though there's so many of us in the country and so many of our communities need it. And this is why regular non-Black banks and financial institutions don't pour into our communities at higher scale and length, because we're not profitable. Simple. Next, we need to make abundant changes. All right. We have to not only study these higher level financial concepts and strategies, but we have to understand that this stuff that I covered on this live stream, the banking relationships, the credit and lending relationships, all of the different components, the healthy finances, the having savings, the having retirement accounts, stable job stability, income. These are the only things that are going to make these other higher level financial strategies that will lead to generational wealth, that will lead to the complex strategies like trust and LLCs and tax strategies and not paying taxes through business ventures and investment strategies. All of that fancy stuff only works when we have the fundamentals of relationship banking and healthy integration and access to the system, and develop on top of that access to the system. So I'm going to serve that problem I'm going to continue to serve that problem with my content. And I will also build on it with the sexy stuff. We'll talk to real estate investing. We'll talk to access to business funding and business, and lending. We'll talk to home ownership. We'll talk about the wealth building strategies. We'll talk about, the legacy planning. We're going to cover that stuff, but I cannot do that I can't serve you effectively, even though I could do all of this complex content and push y'all into a bunch of sales funnels like everybody else is doing, but I'm not going to do that. I'm going to serve y'all by providing largely free, high-level content going over the basics and building this up over layers to try to cover this for as many of you that take the time out to invest in yourselves to watch this kind of content and consume it. Last quick content, understand that it's not because we don't want to, but the bank communicating to Black people. But if you want to, if you're living from paycheck to paycheck, then that's part of the system. You can't get money. Listen, to close out on that, even if you're paycheck to paycheck, you can exercise what I'm talking about in this video. Even if you're paycheck to paycheck, it's harder, but you can establish a healthy relationship with banks. And I'm gonna cover that. I'm gonna dedicate live streams just around these things. Do me a favor, Troy, if you still are on, if you by chance are still on, comment down in the replay of the video some of your questions and some of the things you say. You don't have to go into over elaborate, but comment some of the step-by-steps you're looking for. How to set up relationships with banks, how to set up, how to step-by-step guides to buying a car, home ownership. Comment in the replay. So that way I can lock it in, because this is going to go away once this live stream is over, some of these things you have. So if you're still on, comment in the replay. And again, I'm going to do my best to tailor something for you and many people like you who have these questions. But other than that, I hope y'all took great value away from this and got a better understanding why Black Americans are getting denied at an alarming rate and rejected by banks. We have really rough financial metrics, making us very high risk and low profitability to these banks. And we have to do what's in our control as the system continues to hopefully balance itself out and more right is done systemically, because it's not just us, I understand that, but we have to do what we can do. And these are things we can do. So we're higher risk, we're lower profitability, there's serious distrust, there's lack of communication, and we need to do what we can do to bridge those gaps and fix and heal those problems. Comment down below and let me know if you have any thoughts, questions, comments, concerns, or feedback. Thank you for every single one of you who have tuned into the live stream, and thank you for every single one of you who made it all the way over an hour on the replay. This is a Saturday night, and I am dedicating my time to doing these live streams on a big Saturday night, and I enjoyed every second of it. I hope y'all got value from it. Comment down below, get in the description section and tie in with me on Instagram, slowly building out content there, opening up more about, slowly but surely myself and showing more of myself, and building out more ways for us to connect slowly but surely for my committee of pioneers on Instagram and other social platforms slowly but surely. If you want to work with me on a paid level, dedicated one-to-one, you have access to do so. You can comment down below. You can also, there's a link in the description section that should bring you to a page to show you where I specialize and where I can assist you. If you want as well, just comment down below and let me know if you're interested in learning more to work one-to-one. Business funding, business lending, business banking, consumer lending, consumer banking, relationship banking, home ownership, getting on a ladder for home ownership, qualifying for home ownership, buying rental properties, etc. These are things I specialize in. Qualifying for credit cards, credit card stacking, credit card bonuses, on and on. I have a serious list of expertise that I can add value to you in these various ways. So get in the description down below, or, comment down below if you're interested in getting that hands-on. Otherwise, just keep enjoying the content. I'll put a lot of that information out in general form in these videos. To my pioneers, I'm signing out for the night. I appreciate every single one of y'all. I want each and every one of y'all to stay focused, stay in motion. I'll see y'all soon.